Alright, let's dive into something that's been bubbling in the markets lately, the euro to Japanese yen pair. Now, if you've been keeping an eye on Forex, you've probably noticed this pair has been on a bit of a roller coaster. But here's the thing, it's not just about the numbers. There's a whole story unfolding here, and personally, I think it's a fascinating one. So, let's break it down. First off, what's the hook? Well, imagine this, despite the euro gaining ground against the US dollar, the euro to Japanese yen pair is still struggling. That's weird, right? You'd expect them to move in lockstep, but nope. What makes this really interesting is that it's not just about currency dynamics, it's about global politics, economic strategies, and even a bit of historical memory. Let me explain. So, last Friday, Japan and the US teamed up for a rare yen buying intervention. Now, this isn't something that happens every day. In fact, it's so rare that traders are still spooked by it. From my perspective, this intervention is like a ghost in the room, it's not physically there, but its presence is felt. Traders are hesitant to sell the yen into a falling US dollar because they are worried history might repeat itself. And honestly, who can blame them? The yen has already bounced back from its 40-year low in July, and that's no small feat. But here's where it gets even more intriguing. The European Central Bank, ECB, is playing it cool, keeping interest rates steady. Markets are betting on just one more rate hike this year, maybe two if we're lucky. Now, if you take a step back and think about it, this cautious approach from the ECB is like a tightrope walker, one wrong move, and things could get messy. What this really suggests is that the euro's strength against the dollar isn't translating into dominance against the yen. Why? Because the yen has its own set of unique challenges. One thing that immediately stands out is Japan's reliance on energy imports, especially through the Strait of Hormuz. With Iran and Oman still figuring things out, and crude prices fluctuating, Japan's terms of trade are taking a hit. What many people don't realize is that this isn't just about oil prices, it's about the yen's value. Higher energy costs erode Japan's trade balance, which puts downward pressure on the currency. So, even though the yen is recovering, it's not out of the woods yet. Now, let's talk technicals for a second. On the 4-hour chart, euro to Japanese yen is hovering around 182.00, and it's looking a bit bearish. It's trading below both the 20-period and 100-period SMAs, and the RSI is sitting at 41, not exactly screaming by me. But here's the kicker, the momentum isn't aggressively bearish either. It's more like the pair is stuck in a consolidative phase, waiting for a catalyst. Personally, I think this is where things get really interesting. Are we looking at a breakout, or is this just a pause before the next move? What raises a deeper question for me is the broader trend here. The yen's recovery isn't just about intervention or energy prices, it's about Japan's economic resilience. Despite all the headwinds, the yen is holding its ground. In my opinion, this speaks to a larger narrative about safe haven currencies and their role in uncertain times. The yen isn't just a currency, it's a barometer of global risk sentiment. So, where does this leave us? Well, on the upside, if euro to Japanese yen breaks above 182.17, it could target 182.69 or even 184.70. But on the downside, a breach below 181.30 would reinforce the bearish bias. A detail I find fascinating is how these levels aren't just numbers, they are psychological thresholds. Traders are watching them closely, and that's where the real action will be. As I wrap this up, I'm left thinking about the bigger picture. The euro to Japanese yen pair isn't just a currency cross, it's a reflection of global economic and political forces at play. From Japan's energy challenges to the ECB's cautious stance, every piece of this puzzle matters. So, here's my closing thought, keep an eye on the yen. It might just surprise you. And if you're trading this pair, remember, it's not just about the charts. It's about the story behind them. What do you think? Let me know in the comments below.